Welcome guys to the video where we talk about which options to pick. I know many of you guys have told me that you find it a bit difficult on how to choose the strike as well as the expiration date for the option. So that's something that we'll discuss in this video, and I have randomly taken Tesla as an example just because it's one of the most commonly traded option among the group, just all around the financial markets. After we discuss what options to pick, we'll also discuss how to enter based on the price alerts that are given or a zone in itself. So let's start with the discussion on what expiration to choose. Now, what expiration to choose depends heavily on what your objectives are. So if you just want the first push out of the box. So when we have a box breakout, you will have the first higher high, then a higher low, then a second higher high. And if you just want the first push, like the first higher high, your expiration will be a bit different than if you want the entire trend, the first higher high, higher low, and a second higher high. So that's something you have to be clear in your mind if you would like the entire trend or just the first push. Because that will change the timeline in which you expect the price to move, and that will change your expiration date. So let's take an example. Let's take the example of Tesla, and we can take any box. Let's just take this one box that it was in from the end of July, aka early August, till early October. So around a 2-month box. So when a box like that breaks out on the daily charts, what you can expect is around 2 to 3 days of movement to make the first push out of the box. So in this case, we have a breakdown. So we see there's 1, 2, you can consider this as part of the breakdown. Yep. All right, so we have three candles on the daily charts that help you make the first lower low. Then we have one candle that makes the first lower high. And then we have around 4 or 5 candles that end up making the second lower low. So on average, that was around 5, 6, 7, and around 10 candles. So on average, this entire move out of the box took 10 candles when it was a 2-month box. Now this one was a bit more extreme. You had less of a consolidation in the lower high and just more of a downtrend. That's not always the case. We can look at an uptrend here. When Tesla broke out of this box in July, we have 2 days to make a higher high, 2 more days of pullback, 4 days for a second higher high. So let's say around 8 to 9 days. So that will be kind of your heuristic for the entire move on a daily chart. If you're dealing with a box on a daily chart, and if it's not a 4-day box, right? Like let's say if it's a box of a month and a half to 2 months, then your heuristic would be the expiration time should be around 1/4 of that. You will expect the move to happen in around 1/4 of the time that the consolidation took. So let's say it's a 2-month box, you expect the move to happen in around 13 to 14 days. Right? I say 13 to 14 days because when I say a 2-month box here, that's not all trading sessions, right? There are some holidays, obviously the weekends. So when you have 10 candles, that's around 2 weeks of movement. So for a 2-month box, you have around 2 weeks of movement in which you will get the entire move which you want. The first higher high, higher low, and the second higher high. So that's a heuristic, right? This is not exact science. This is an approximation of how things occur. And that is something to keep in mind. So if you're looking at a daily box, usually the time frame for the move to play out would be 1/4 of the consolidation. And for expiration, you can pick something with a bit more margin of error. So let's say you will take few days extra from the time frame you want the move to play out. So in this case, let's say Tesla played out in 10 sessions. So I will take an expiration date for about 3 weeks out, maybe a month out, just to be on the safer side. if you're dealing with a box, let's say a 9 MA box, which is a 3-day consolidation, something like this on Tesla. Let me pick up something that's more obvious rather than this one because it's part of a consolidation. Let's say you recognize this. You recognize this 9 MA box, a smaller consolidation, and you just want this trend to play out. What this box is a bigger box on a smaller time frame, and the entire move is playing out on a smaller time frame. So if it's, let's see, 1, 2, 3, 4, 5-day consolidation, you expect 1.5 day of movement. Well, you would be pretty spot on. That's kind of what you would estimate. In that case, you can get an expiration 1 week out. I hope this heuristic makes sense. It makes it easier to make decisions while you're in the heat of the moment in the markets. You don't have to overthink this stuff. Let's discuss the strike, because that's the second most important thing. You have to make two decisions when you're choosing an option, because more often than not, you won't really worry about the implied volatility unless earnings are in play or something like that. More often than not, you will only worry about the strike price and the expiration date. So let's think about the strike price. This is another heuristic I use. I expect the move from the break of the box to the second lower low in this case, or a second higher high, to be equal to the size of this box. So in this case, we have a box from 275 to 313, so let's say around $50. I would expect that the whole move out of this box will be around $50, in which case we would reach around 225 for Tesla. Now, yes, this sell-off at the end of September, this sell-off in Tesla was a bit more extreme. So we did go over that margin, right? Like we stopped at 225, which is an important zone, but then kept on selling a bit more to around 205. However, this heuristic works out quite well for the most part. Let's see if it works out in this case. 210 to 253, around a $44 difference. So my estimate when we broke out of here would be around, what is it, 298. So around 298, and let's see where we went. We went to 300, above 300. This is where we overshot from 300 to 312. Now, it's a pretty good heuristic. In case of Tesla, we are underestimating, which is completely fine. Tesla is a bit more crazy compared to other stocks. But more often than not, this heuristic will work out quite well. So if you want the entire move, right, you want to choose a strike that falls comfortably below the estimate of where your price is going to go. So if I take this breakout and I estimate that the price is going to 300, then I will choose a strike of something like 275, 280, something along those lines. You want to have a good enough margin of error for the entire move to play out. Now, if you're only looking for the first push out of this, then you can expect the price to only go towards like 40 to 50% of the entire move. So in this case would be from 253 around 278. So I would choose a strike of around 260. I hope these heuristics give you an idea of how you can make quick decisions about these things. The whole point of strike is you expect the price to go above the strike, because that's the only case in which your option will be profitable if held to the expiry. So if you choose a strike which is quite far, let's say 340, 350, the closer we get to expiration, the faster that option will lose value, and you don't really want that to happen. So always keep a good margin of error. These are the heuristics I use in order to choose my strike price and expiration date. For the most part, they work quite well. I hope this makes it easy for you guys to choose them as well. If you have any questions about this part, please ask me in the chat. I will be happy to clarify. Now let's look at the second part. How do we enter an option trade? So this box, right, I had mentioned it in the watch list of last week. This box was in the daily charts. It was a very good looking box. It had a medium squeeze. And I had mentioned in my price alerts, a break and hold below 203 could take this price to 186. It went a bit lower, but 186 with support at 197 and 190 on the way. Those levels turned out to be pretty damn good the entire week. But let's see how you could safely enter those. So if you are looking at the box breakout on a daily chart, right? Like if it's a daily box, if the box is on the daily chart, and then you want to look for entry on the hourly chart. So in this case, what I would do is I would look for the candle, the hourly candle that forms around my price zone. Let's say this hourly candle breaks below the zone or the alert I had. What I would do is wait for it to close. Now in this case, it closed pretty down bearish. So I would enter right away because that's completely fine. But if the candle didn't close bearish, let's say, I think we had something like Apple. Yes, I had a zone for Apple at 137.5. So let me move that a bit. Something like that. Okay, so let's look at this candle. For example, this candle broke below the zone, but it didn't really close bearish. It closed as an indecision candle. You have big wicks and price kind of stops in the middle. So in that case, what I would do is I would wait for price to break below the low of this candle in order to enter. In the case of Tesla, because the candle was fully bearish, I would enter right away in this case. But if the candle had not closed bearish, let's say it closed somewhere here, then what I would do is wait for the next candle to break below this, below the lows of this candle that broke the zone, and then enter. Now this is on the daily, this box is on the daily chart, so you can use the hourly candles to enter. If the box was an hourly chart, you could look at the 15-minute candles to enter. So if I say break and hold below 203, then you want to see how the candle closes. For example, in this case, we had the break below 203, but the candle closes above it. So there is no reason to enter right now. Then we wait out, and once the low of this candle was broken, that's when you would have entered. I hope that made sense. That's how I look for entries. If price breaks below the zone and holds, what do I mean by hold is it closes below the zone bearish. So in this case, if my price alert says break and hold below 203.8, in this case 203.8, let's say that's what the price alert says, then this is a break below that price alert, but it's not a hold. Price came back above it. So what I would do is I would mark this candle, and as soon as price would break below the low of this candle, that's when I would enter. Let me see if I can find some more examples. Roku. All right, Roku would be a good example. All right, this would be the zone for Roku. If the alert said break and hold below 48, you have multiple candles that break below 48, but they do not hold it. And the only way you will know is you have to wait for the hourly candle to close. If it's a box on the daily charts, you can wait for the hourly candle to close. You're not going to miss out on the trade. There's no need to FOMO. You can see many of these candles broke below, but they never really closed bearish. They're all left wicks, even here. So in this case, what you would do is I would have entered here. So initially this price broke below, did not close bearish. So I would have marked this low. I would have entered on the break of that, but seeing that this one also did not close bearish, I would have exited right away. What you want to see is once price comes back and breaks below the lows of this candle, then you want to see some bearish action right away. But this is how you decide on when to enter at the zone. For a box on the daily charts, you would look at the hourly candle. You would look for a bearish candle form that broke below the zone for a short, and you want a bullish candle form that broke above the zone for long. This is a perfect example. So in the alerts, if I had break and hold above 60.3, then I would wait for this hourly candle to form. You see how this hourly candle formed? It's very green. that's a bullish candle and it broke up with the zone. So in this case, I would enter right away. But if this candle had not closed as bullish, something like this, then I would not enter and I would mark this level and then enter on the break of that. That summarizes the ideas I wanted to present in this video: how to choose your strike, how to choose your expiration, and how to enter based on the price alerts and the zones mentioned in there. If you have any questions, feel free to hit me up in the chat. I'll be happy to explain it more. Good luck.